Tom Essaye, one ETF you like at the Sevens Report is the Claymore Delta Global Shipping ETF. The ticker is SEA. Had a rough 2014. It's come back in 2015. Will we continue to see smooth sailing?
Yes, we think so, and based on basic supply and demand fundamentals. Number one, we've seen a tremendous decline in oil, but for those of us who follow commodities very, very closely, the term structure in oil has become very bullish for storage. Combine that with a tanker market that has seen a lot of scrap over the past year, you have more demand and lower supply. Same thing with the shipping companies. Yes, I know shipping companies have traded very poorly over the last year, but most things have that rebound, right? Again, we've had a lot of scrap in the container ship industry. There is growing demand. Keep in mind, 24 global central banks have cut rates or enacted QE this year. Sooner or later, that has to help the global economy. There are not enough tankers and shipping companies anymore to move all the product that we're going to need going forward.
You're also bullish on the Ishares Sweden ETF. I think the biggest holding is H&M, which is that big retailer now sweeping across the nation.
Right.
You also have a few banks in there. My big question is, why Sweden?
So we have a pretty overarching axiom. We want to buy stocks in countries that are doing QE programs. Because what do we know about QE? We know QE makes stocks go up. Now, we don't know whether or not it fixes the economy. We don't even know that here. But we do know that when they enact QE, stocks go up. Sweden enacted its own QE program in February, added to it in March, and will likely add to it again in May. When they're doing QE, stocks go up. We think Sweden keeps going up just based on that general QE program.
And then finally, you're a fan of the iShares Tips Fund. People are still waiting for inflation here in the U.S. Maybe it'll come sooner or later. I guess it will. Why do you like tips?
Well, so you have to remember what tips are. So let's remove tips from the inflation debate for just a second. Tips are calculated based on the CPI. CPI has been very artificially depressed because of the collapse in oil prices. Oil has stabilized, global commodities have stabilized, and we are beginning to see a lift in CPI. As CPI rises, tips rise. As that accelerates, tips will go up also. It's as much a play on the fact that these are a value and artificially depressed because of how low CPI got than they are this general inflation call. But we think if you're going to be in the fixed income market, tips are an interesting place to look, considering that inflation basically can't get any lower unless you think we're going into a deflationary depression, and then we need to have a whole other discussion about how people are positioned.
All right, thanks a lot, Tom.
Thank you very much.
Thank you for watching The Street.